Why do most traders fail? It is not the strategy, it is not the market, it is randomness. No plan, no structure, no idea where to enter, where to exit, or when to stop trading. Just impulsive decision, chasing price and switching strategies every time. Something goes wrong and the result, inconsistent performance, blown account and frustration. But here is the thing, successful traders aren't necessarily the smartest or the fastest. They are the most disciplined. They have the structured process that eliminates randomness from their trading. And that's exactly what I'm going to teach you today. If you have been struggling in the market, watching this till then, because by the time you were done, you will be having a step-by-step roadmap to go from random trades to structured profitable trading. Step 1. Trade one market, one session. The biggest mistake new traders make, they try to trade everything, every stock, every forex pair, every session, thinking they are increasing their chances. In reality, they are setting themselves up for the failure. Every market has its own behavior, every session has its own movement. Trying to trade everything just means you will never master anything. Here, what successful traders do: pick one market, whether it's NAS 100, gold or Euro USD. Focus on one and master it part-time. Pick one session. London session, ideal for continuation move and breakout trades. New York session, best for reversal as it react to early price action. Find a session that fits your trading schedule and stop forcing trade in bad condition. One market, one session. That's the foundation of consistency. Step 2. Get access to large capital. Let's be honest, you need capital to make money in trading. If you were trying to grow a $500 account, you were either over leveraging or making cents per trade. Neither will get you anywhere. But here is the thing, you don't need to risk your own capital to trade big. Pro-firm funded skill traders with 5,000, 10,000, even 1 lakh plus accounts. How pro-firm work? First, take an evaluation. The firm tests your trading skill. Then pass the challenge. Prove that you can trade with risk management. If you do these 2 steps right, you will get funded, trade with their capital and keep 75% of the profits. Instead of taking years to grow a small account, you get access to real capital instantly. That's why at Livex Capital we fund traders with 5,000 to 1 lakh USD dollars with weekly payouts up to 90% and easily scale up plan. If you were serious about trading, stop struggling with undercapitalization. Get funded and trade with proper risk. Step 3. Trade only A+ setup and risk 3% per trade. Most traders fail not because they take bad trades, but because they took too many trades. If you were just clicking buttons every time a candle move, you are gambling, not trading. Here's what separates pros from amateurs. Only trade A+ setup. If the setup doesn't match all your condition, don't trade it. Risk only 3% per trade. This keep your account safe and increase your chance of passing pro-firm evaluation. Stick to a max number of trades per day. Over trading kills profitability. Set a limit and stop when you hit it. In trading, doing nothing is better than taking a bad trade. Learn to sit on your hand and wait for a high probability setup. Step 4. Build a structured trading plan. Every profitable trader have a rule-based trading plan. What should your trading plan include? Clear entry, exit criteria, no random trades, every entry must be predefined, fixed risk reward ratio, aim for at least 1:2 or 1:3 per trade, set a max loss per day, 5% or less to protect capital. Set a max loss per day, 5% or less to protect capital. Maximum number of trades per day, prevent overtrading and emotional decision. Your trading plan is your rule book. If you don't have one, you are gambling, not trading. Step 5. Backtesting and trade journaling. Would you drive a car without testing the brake? No. Then why trade a strategy without testing it first? How to test and track your trade? Backtest at least 100 trades before trading live. Keep a trading journal. Log every day. Review your trades weekly. Find your strength and weakness. Trading without backtesting is just jumping into ocean without knowing how to swim. Test before you risk real money. Step 6. Mastering trading psychology. Even with the best strategy, you will fail it if you can't control your emotion. What destroys most traders? Fear, greed, cutting winners too soon, holding losses too long. Revenge trading, trying to make back losses with impulsive trades, breaking the rules. The moment you ignore your strategy, you lose consistency. The best traders detach from the outcome. They follow the plan, accept losses and stay disciplined no matter what. Your mindset is the ultimate edge. Master your psychology and you will be master trading. Final step. Trading setups and tool. To trade effectively, you need the right tool. TradingView, best platform for chart analysis, pro-firm funding. Livex Capital gives access to funded account from 5,000 to 1 lakh USD. Fast execution and internet stability. A good setup reduces slippage and execution delay. Trading is a serious profession. Treat it like one. Use the right tools, stay consistent and eliminate randomness. Next, we will see what are some of the common trading mistakes and how to avoid them. Lack of capital. Use a pro-firm capital like Livex Capital to get funded. Fear and greed. Stick to your plan and ignore emotion. Over trading. Set a daily limit and stop when you hit it. Most traders fail because they don't fix this mistake. If you wanted to be in the top 10%, trade smart, not randomly. Become a successful trader isn't about luck. It's about having a process, sticking to it. Follow this structure for the next 6 months. One market, one session, funded capital over small personal account, risk managed, rule-based trading. Journaling, backtesting and consistent improvement. The difference between the traders who succeed and those who fail. Discipline, stick to the plan and success will follow. Subscribe for more trading insights and start trading smart.